Ordinance is now history. The government issues a statutory order in lieu of repromulgating the ordinance, but sources say instead of the 9 changes that the ordinance brought in, the government will retain only one: compensation for land acquired under 13 acts like the SEZ Act. The Coal Mining Act will now be under the 2013 land law. That's a CNBC TV 18 exclusive. Bulls survive a late onslaught from the bears to end a volatile session with healthy gains. The Nifty reclaims 8,000. The Sensex rises over 160 points. Credit growth slumps to single digits in the first 3 months of this fiscal. RBI data shows growth is at its lowest level in the last 20 years. Sun Pharma faces a class action suit in the US. The court says the company failed to issue prior notifications over the closure of its Caraco plant in 2009. The stock tumbles in trade. After Bharti Airtel, Vodafone announces the launch of 4G services in 5 circles by the end of the year. Will also expand 3G services to cover 16 circles. Bharti Airtel revises its plans to exit Sri Lanka and Bangladesh. Sources say Etisalat and Orange are interested in the company's telecom operations, and ATC is eyeing the tower assets. That's an exclusive. Nearly 18 crore bank accounts with 22,000 crore rupees as deposits. The government submits the Jan Dhan report card on the scheme's 1-year anniversary. Claims over 41% of the accounts have been linked to Aadhaar. One rank, one pension approved in principle, but holes need to be plugged, says the government. This even as war veterans boycott the ceremony to commemorate the 50th anniversary of the 1965 war.
India is at the cusp of a major opportunity in terms of what's happened globally, particularly vis-a-vis China.
India can benefit from China's slowdown, says the Tata Group veteran and member of the Tata Trust, R.K. Krishnakumar. Also adds that India should learn from China's mistakes and create a sustainable development model. Former Apple CEO John Sculley launches his new line of smartphones called OB World Phone. A ground report from San Francisco coming up.
This week's events complicate the picture, but I think it's too soon to say it fundamentally changes that picture.
There's a broad consensus. This is not the time to be raising interest rates.
Get to our target, provide the stimulus that's required to get back to target, given that we face this zero lower bound.
Well, will she or won't she? Janet Yellen has skipped the Jackson Hole summit, but she is the biggest talking point at the annual symposium of central bankers across the world. A ground report coming up on India-Bissau. Good evening. Thanks very much for joining us. We begin the show with the story that we've been reporting on here on CNBC TV 18. Just like we told you, the Land Ordinance is now history. The government has issued a statutory order in lieu of repromulgating the ordinance, but sources say instead of the 9 changes that the ordinance brought in, the government will retain only one, and that is compensation for land acquired under the 13 acts like the SEZ Act, the Coal Mining Act, which will now be under the 2013 land law. Remember, the Land Ordinance lapses on the 31st of August, and CNBC TV 18 had first reported on the possibility of a statutory order just 2 days ago. Joining us now to talk about this is Supreme Court Senior Advocate KTS Tulsi. Mr. Tulsi, appreciate you joining us here on CNBC TV 18. What do you make of the government's decision to issue a statutory order to take forward what the Land Ordinance has left behind?
You see, the statutory order can only be valid so long as the statute is in force. If the statute lapses, the statutory order will lapse automatically. I can't understand the use of issuing a statutory order without promulgating the ordinance. It's not a substitute. So I think it is an anomalous situation that will result and the statutory order will not be able to save anything.
We're also trying to grapple with this and understand this because the Land Ordinance had moved 9 changes to the 2013 Act. If I look at what the statutory order now says, the statutory order is basically talking about only one change, which is to bring the 13 central acts under the 2013 land law for resettlement and compensation. So it looks like the government has dropped the other 8 changes that were being proposed, and since this business of the 13 central acts was already part of the 2013 statute, that has now been taken forward as part of the statutory order. What do you make of that?
The statutory order will be valid only so long as the ordinance comes into force. It can't be substitute for the ordinance. There are only 2 sources of law so far as the Constitution is concerned. The law enacted by Parliament and given assent to by the President. And the other is when the houses are not in session, an ordinance to tide over some urgent necessity. Now, if there is no ordinance and there is no statute, there can't be any statutory order.
But there is a statute, isn't it, Mr. Tulsi? Because the 2013 land law currently exists.
2013, quite right. Under that, if the order is sought to be made under the 1930 Act, that's a different matter.
No, the order is being made under the 2013 Land Act, sir.
2013 Land Act, then it would be valid.
Yes, that is exactly what they're trying to do, sir, at this point in time.
Very well. That means that then there will be no ordinance.
That is what it seems like, because it says it is proposed to issue an order under the removal of difficulties of Section 1131 of the Land Act 2013 for extending the provisions of compensation, rehabilitation, resettlement as mentioned in 1st, 2nd and 3rd schedules to the Act in the 4th schedule of the Land Act. So this is being done as a statutory order taking forward 2013.
For that I would welcome. I'm glad that that is being done, because then at least the statute can be enforced, and the benefits which are conferred under that statute will reach the people.
Okay, just hang in there, Mr. Tulsi. Let me bring in Congress leader Manish Tiwari as well. Mr. Tiwari, appreciate you joining us here on CNBC TV 18. One would imagine that the route that the government has taken, which is not to repromulgate the Land Ordinance because they would have had to prorogue the session, but they've taken the statutory route, and that would suggest that there is still a window of hope and opportunity for a special session being called or Parliament being reconvened to try and push the GST bill through. What do you make of this development?
Well, I think those 2 strands are completely unconnected. The Land Acquisition Act stands on its own merits, and the various ordinances, or the ordinance which was promulgated and repromulgated, was an aberration to a process which had been sanctified by both houses of Parliament with very enthusiastic participation by the BJP at that point in time. So one would wonder as to under what pressure or what compulsion was this ordinance route adopted by the central government.
But let's forget about the ordinance route, Mr. Tiwari. I'm trying to understand why the government would choose to issue a statutory order on the land bill, which takes forward the 2013 land law, which obviously seems to suggest that there is a window of opportunity to try and broker some sort of an arrangement with the Congress party, reconvene the monsoon session of Parliament and push the GST bill through.
Well, that sounds more like your wishful thinking than any coherent political strategy, because
how else would you explain this?
Well, I did not know that business channels have also got the contagion of the anchor interrupting before the guest can get 2 words in stream. So therefore, if you allow me to explain, I would.
Go ahead.
I would try to, but in case you only want to listen to your own voice and turn it into a monologue, then you can be my guest.
No, please go ahead, sir.
Well, essentially, what you're trying to do is confuse apples for pears. the goods and services tax has its own issues. There are still design issues. There are still issues with regard to what would be the optimal level of taxation, the grievance redressal council, etc. Stuff which needs to be sorted out by the government in consultation with the opposition. The Land Acquisition Act was, or the ordinances were a complete aberration. And ultimately, because there was so much of resistance, that the government had to go back on it and eat a humble pie. And even this executive order which has been promulgated, which you were trying to sort of read out, and I was trying to understand what Mr. Tulsi was saying, I'm afraid, if possibly the land which has been acquired under different notifications or under different acts, which were a part of the ordinance, and if this executive order intends to save that acquisition, I'm afraid that is not going to happen, for the simple reason that once an ordinance lapses, anything which is done in pursuance of that ordinance also automatically goes. So therefore, the government has actually tied itself up a notch. Insofar as the goods and services tax is concerned, that would really have to be dealt on its own merits, and that does not take away from the fact that the fundamental issues with regard to as to why the previous session of Parliament could not function will have to be resolved by the government.
I appreciate that point, Mr. Tiwari. If you can just hang in there for 30 seconds, I also want to get in a word in from industry. Vinay Chatterjee of Feedback Infra joins us. Mr. Chatterjee, appreciate you joining us. Is this now a case of the government tying itself up in even more knots and complicating the matter even further? Because what we see from the statutory order that now has been notified by the government seems to suggest that the 13 central acts have been brought under the 2013 land law as far as compensation is concerned. How would you react to the developments of the day?
Well, Shireen, very positively, because this was bound to happen. You see, you can't, when the UPA passed the 2013 Act, it left out 13 specific acts. Like the Railways has its own act, NHI has its own act, Minerals have their own act. It left out 13 specific acts that had their own method of acquiring land from the purview of the 2013 UPA's Land Act. Now, that was an anomalous situation because as a seller of land, if I'm a villager, I can't get compensation X if it is acquired for an SEZ, and I cannot get compensation Y as if it is acquired for NHI. So it was an anomalous situation that should not have been allowed to exist, and there was a sunset clause. We are now close to the sunset clause, which is 31st August, and the government has done the only sensible thing possible by saying that irrespective of the purpose for which land is acquired, the same compensation will be paid as notified under the Land Act. It is inevitable, it is logical, and it is only sensible that it has been done, which should have been done in the first place anyway in the 2013 Act.
Fair point, but is there concern now, Vinay Chatterjee, that some of the other changes that were proposed, and there were 9 changes that the ordinance brought in, only one is being kept alive, which is bringing the 13 central acts into the 2013 Act, but the other changes that the ordinance had brought in have virtually will lapse come the 31st of August?
Well, actually the concern is not as acute for the simple reason that a careful reading of the 2013 Act reveals that government itself can acquire for government purposes large tracts of land like for industrial corridors and for industrial parks, etc., which can accommodate the normal demands of industry to set up factories and institutions, etc. It doesn't bar. However, the large industrial projects or infra projects or steel or fertilizer which require 500 to 1,000 acres will now have to necessarily go through SIA and compensation and consent clauses. The expectation is that since much of the responsibility is seen to be passed on to the states, I think the expectation is that competitive federalism will take care of many of the clauses not being as onerous as they have been thought to be.
Yeah, Mr. Tulsi, I want to get your comments in on that, because that is the model that the finance minister seems to be suggesting, and they say that this idea came from chief ministers of states like Maharashtra and Punjab, which is to allow the state governments and give them more power to legislate their own acquisition laws within the purview, of course, of the central law. And if there is any deviance from the central law, then seek presidential assent to deviate from the central law. How do you see this moving on the back of the fact that the ordinance is now gone, there is a statutory ordinance in play, and for all practical purposes, we're now back to the 2013 land law?
Well, I'm not certain so far as the area which is occupied by the central law is concerned. The state law cannot be are permitted to be at variance with the central law, and the central law prevails. So, if the states think that a statutory order, whether it is valid or not, will have to be examined, I can't really express an opinion. But it all depends whether under the 1913 Act, the power is given for issuance of this order, and if it stays within the express delegation of power to the government, it may be possible, but I can't express an opinion one way or the other.
Sure.
But it's a good thing that they have given up the idea of repromulgation of the Land Ordinance, because that is clearly unconstitutional and a misuse of the power that was being exercised.
Okay. Mr. Tiwari, would you at least welcome the fact that they have decided not to repromulgate the ordinance one more time? And what now happens as far as the negotiations which are currently underway within the parliamentary panel, which has already sought more time till the winter session of Parliament to submit the report as far as the land law is concerned?
Well, first of all, I would tend to agree with what Mr. Tulsi is saying, that the validity of the the executive order would have to be really examined, because I wonder as to how an executive order can possibly bring within its ambit, or bring within the ambit of the law, certain central acts without really amending the law itself in order to incorporate it. So therefore, as we go forward, it'll have to be seen as to how the government has actually tried to bring it within the four corners of the law. Insofar as the parliamentary panel is concerned, I frankly have no clue as to what is going on with the parliamentary panel, at what stage their discussions are. But the fact that the government has decided to drop any proposal of repromulgating the ordinance is, of course, welcome, for the simple reason that even if wisdom has prevailed upon them a little late, it is much better than the folly which they were about to commit.
Mr. Tiwari, I know you believe that these issues are not connected, but may I ask you if you believe that there is a greater degree of a possibility of a special session being reconvened to take the legislative action of the monsoon session that was pending forward, which basically means can we expect a breakthrough on the GST bill?
Well, as I was pointing out to you earlier, the goods and service tax issue has not come up yesterday. If you recall, on the 16th of February 2011, the former Prime Minister, Dr. Manmohan Singh, had pointed out in a press conference with the electronics media editors, where possibly you two were present, that the reason why the GST bill is not going forward is primarily because the BJP wants the government, the then government, to roll back a criminal investigation against a particular Gujarat minister. So after having hijacked the whole process or subverted the whole process for 10 long years, suddenly the BJP seems to be discovering the virtues of the goods and services tax. So therefore, if they've discovered the virtues of the goods and services tax, so be it, it's very good for them, but then some of the fundamental and germane issues which had stopped the functioning of the Parliament session because of the intransigence of the government, those will have to be dealt with. You see, if you think that the opposition is going to feign complete amnesia and pretend that the demands which they had raised in the previous session, or the adjourned session, or if you want to call it a continuation of the monsoon session, was something which was a figment of their imagination. I'm sorry, that's not happening. So therefore, if the government wants to walk the extra mile, it'll have to walk the extra mile completely and not walk it in a manner of selective amnesia.
Okay, well, let's see if the government decides to walk further towards the Congress party, and whether we do in fact see that special session being reconvened to try and push the GST bill through. But at least for this evening, the big development is the statutory order, which has been notified by the government, just as CNBC TV 18 had reported. In fact, we reported this on Monday, if I remember correctly. Vinay Chatterjee, KTS Tulsi and Manish Tiwari, appreciate you joining us here to take us through your comments on the big development of the evening. Well, I spoke with Union Minister Nitin Gadkari on the land bill, and he promised that the government would ensure continuity just yesterday. Listen in. If you cannot repromulgate the ordinance because the session hasn't been prorogued, how do you ensure continuity? Or are you willing to let the ordinance lapse and let the state governments as and when decide what they want to do with the Acquisition Act?
Our government will take appropriate decision at the appropriate time.
That's all you're going to say?
Yes.
So the ordinance will lapse, and will you ensure continuity or not, sir? That's my only question that I'll ask you on this.
Your question is very important, but my answer is the appropriate time, appropriate decision.
You don't have much time, so the ordinance lapses on the 31st of August.
So wait and watch.
Okay. Well, I guess this was the appropriate time. 31st of August is when the ordinance lapses, and today that statutory order has been issued. Still trying to understand what the government is attempting to do with this, but we'll try and ferret out more details as we go along. But on to the action on Dalal Street. The bulls continue to regain lost ground in trade today. They maintain the momentum after yesterday's rally to end a volatile session with some healthy gains. The Nifty gained over 50 points, ending the day above 8,000. In fact, at one point, it was just shy of the 8,100 mark, but most of those gains were paired. The Sensex also gained over 160 points as the bulls held firm in the last hour to withstand an attack from the bears. The mid-caps underperformed marginally in trade. Nonetheless, they also ended in the green. Both the Nifty and the Sensex ended the week lower by 3.6%. Anuj is standing by to wrap up the day's trading action for us. Anuj, the recovery continues today.
Oh yes, the last 2 days have been quite good for the bulls, and today in fact they survived a bit of an onslaught from the bears. Midday it was looking like the market was going to have a perfect Friday, and the Sensex and Nifty would end at the high point of the day. But somewhere around post noon, you did see quite a bit of slip, and the Nifty almost went into the red. So from the cusp of 8100, 8,092 to be precise, the Nifty went to 7962, but finally closed above 8,000. It was all about China and commodity stocks, because we did see quite a bit of rally in commodity stocks. In fact, it was global in nature with the kind of rally we have seen in US market as well over the last couple of days. Let's talk about the stocks then. It was commodities, as I said, on top in terms of big gainers today. Stocks like ONGC, Vedanta, KN India, all of them up about 5 to 7% in today's trade. Not just that, some other commodity stocks like NMDC, GAIL, and even Hindalco did well in today's trade. The real contribution to the index came from these three stocks. Infosys clearly was the biggest contributor, up about 2.5%. Tata Motors up 2%, and Bharti Airtel, strong gains for Bharti, up about 4%. On the losing side, one man's pain is the other man's gain. So you had stocks like BPCL that was down about 2% because of higher crude prices. Pharma had a bad day today, especially the large cap one. So Sun Pharma and Lupin were both lower by about 2%. On the mid cap side, there were some big winners today. Gati was probably your stock of the day. That stock was up 7%. Reliance Communications was up 5%, and Mercator was up 5%. But there were some losers as well, especially in the high beta space. Stocks like GMR Infra, Indiabulls Real Estate, and HDIL were all lower by about 5%. What today has done is that it still kept some doubts open on whether what we're seeing right now is a circus rally or whether the bottom is in place. For now, both the bulls and the bears survive, and they'll have another battle next week, and maybe we'll have an answer in terms of who wins.
All right, Anuj, thanks very much indeed. You have a great weekend. Now, central bankers from across the world have gathered at Jackson Hole in the U.S. for the three-day summit. And the biggest talking point there is the U.S. Federal Reserve and its rate hike timeline. Steve Leesman with this ground report.
This grizzly bear stands at the entrance to the Fed's deliberations in Jackson Hole, a threatening reminder that they may not be out of the woods when it comes to the dangers of raising interest rates. But one Fed official is ready to stare down the bear.
This week's events complicate the picture, but I think it's too soon to say it fundamentally changes that picture. So in my own view, the normalization process needs to begin, and the economy is performing in a way that I think it's prepared to take that.
It's a major question for the Fed, to be deterred by the markets or propelled by the better economic data. Rate hike advocates like George got ammunition today in the form of a major upgrade to GDP in the second quarter to 3.7%. Every major component, the consumer, business, and government, was revised higher. It was a substantial bounce back from the weak growth that started the year.
In particular, it was very good to see more investment, because I think that's been one of the challenges where we haven't been seeing enough investment, and I think that's one of the reasons why we haven't been seeing wage growth. So if we can get more investment, that means firms are more comfortable with where the economy is going, less uncertainty, there'll be more hiring, more wage growth, and then we're on a good path.
But there are those who say the Fed should fear the markets more.
The case for September was weakening even before the sell-off. And I think the sell-off does matter, even though you absolutely shouldn't set policy for the benefit of the markets.
And here in Jackson Hole, there's another element for the Fed to consider: politics. Protesters led by Nobel Prize-winning economist Joe Stiglitz delivered a petition with 110,000 signatures, urging the Fed to stand pat so workers' wages could rise.
I don't see this as a hard call. And what is interesting is that the widespread support among people who are not of the mindset of the Fed, not involved in the financial markets, people who are really concerned about the real economy, there's a broad consensus. This is not the time to be raising interest rates.
As Fed officials prepare to meet, the mountains are shrouded in clouds, a bit like the outlook for Fed policy ahead. No doubt there's a bear lurking in those woods. Steve Leisman, CNBC Business News in Jackson Hole, Wyoming.
And so the Kansas Fed president is saying that September is the right time to hike rates, but the president of the Minneapolis Fed had a contrarian view. Speaking to CNBC Steve Leisman, Narayana Kocherlakota said rates should not be hiked this year. Instead, he's made a case for further quantitative easing. And Stanley Fischer is saying it's too early to tell whether or not we will see a September rate hike. A case for September hike existed previously. Recent developments responsible for uncertainty, confident about reaching 2% inflation. So listen into the views coming in from Jackson Hole.
I don't see a near-term increase in interest rates as being appropriate. And by near-term, I mean really through the rest of 2015. The reason I say that is if you lift off interest rates, given the inflation outlook that we have, what are people going to conclude? They're going to conclude the Fed doesn't think it can hit 2%. It's not really interested in hitting 2%. And you're going to start to see our credibility in terms of our long-run, people's beliefs about what our long-run inflation goals start to slide. And you're already seeing that in market data. So this is not some economic theory. This is actually reality.
So it's a divided house there in Jackson Hole. And our own central bank governor, Raghuram Rajan, is there, the very place where he predicted a crisis in 2005. And we will bring you a live interview with Governor Rajan, with CNBC Steve Leisman, right here on CNBC TV 18. Catch Governor Rajan over the weekend on CNBC TV 18. On to Wall Street, U.S. stocks traded in a narrow range on Friday in the final day of a volatile trading week as investors eyed data as well as the Federal Reserve's commentary, or at least speakers' commentary from the Fed. Now, across the Atlantic, European markets have ended the day mixed. The FTSE and the CAC are in the green, but the German DAX ended with losses. So that's the story across Europe, but the recovery continues in China as stocks ended the day 5% higher, and today's rally followed a 5.4% gain again on Thursday amidst reports in the session that the People's Bank of China has purchased blue chip stocks and requested that state-owned banks buy more yuan on its behalf. Meanwhile, the PBOC injected 60 billion yuan into the economy via short-term lending operations. So that's Shanghai for you, higher by 5%. Oil prices, meanwhile, continuing to head higher on Friday after bouncing back from 6.5-year lows on recovering equity markets, strong U.S. economic growth and the news of low crude supplies from Nigeria, so higher by almost 5.5%. That's Brent back at 50 and NYMEX now a little over 5% higher at 44.85. So the rally continues there for the second straight day. Well, with that, it is time for us to wrap up this edition of India Business Hour. Remember to stay tuned to CNBC TV 18 through the weekend. RBI Governor, Finance Minister Arun Jaitley, all of them live right here.